When silver makes a move, the moves are enormous. Where in this market is there room for Russia or any country to start buying silver? The supply's not available. In the absolute end game, you could see gold at $10 an ounce offered on Comex and no bids, and $100,000 bid in the cash markets, but no offers. That we would get to a point where no one would release gold, no one would release silver for any fiat price, because, fiat being viewed as nothing. So I think that's what changed the game, because typically when you see higher rates or a stronger dollar, you see weaker gold. That's been the past. You're not seeing that now. And I think the reason being is the world saw what the U.S. did with Russian reserves and is thinking to themselves, well, hey, wait a minute. If they can do it to Russia, they can certainly do it to us. So let's sell our treasuries that we hold as reserves and buy gold and hold the gold in hand, in a vault in their country. And let me just comment, I think the reason a lot of mainstream, not mainstream media, but mainstream financial people miss this whole thing is because they're Keynesians. They're not Austrian economists. Austrians, to simplify it, it's common sense. Austrians are like the perfect common sense, and Keynesians, it's like it's like the thought process is made up, if you will. And the thought process with the Keynesians is that the best asset on the planet is U.S. government debt. And when I say the best asset, that means gold is not there. Gold is, a lesser asset. When in fact, that's not the case, because the treasuries, the currency of treasuries can and is being diluted. The danger of not being paid back, an outright default, is rising, although I don't think that'll happen because they can always print. But there is that danger. And on top of that, then there's the danger that the U.S. Treasury will decide, oh, well, we don't like what you're doing. Your money is now ours, like what they do with Russia. So I think the Keynesian thought process is flawed from the respect of they don't understand what's the true foundation to the financial world. It's gold. It's not treasury bonds, although for the time being, it is treasury bonds. But there's going to be a comeuppance that the likes that the world collectively has never seen before. How I think they will, what you're saying, revalue gold. There's been talk of using the gold, the supposed 8,300 tons that the U.S. has, using that as either collateral or selling it to buy Bitcoin and creating a Bitcoin reserve. And Bitcoin's going to be, $20 million in 10 years, and that'll bail out, it'll cover the entire treasury debt spectrum. That's how they'll, if they actually do go through with that, which is lunacy. First off, I don't think the gold's even there, but even if it was, it's complete lunacy, because you're taking the ultimate real asset and putting it into the, ultimate unicorn asset, whatever you want to call it. But that would require the Federal Reserve to revalue the gold. What U.S. Treasuries are backed by the full faith and credit of a government and of a treasury and central bank that is technically insolvent, as opposed to gold nor silver, neither can default, neither can bankrupt. And if you have it secured where it can't be taken or stolen or whatever, if you have it in hand, there is no counterparty risk whatsoever. I mean, gold has value because it is. Treasuries have value because the U.S. military tells you they have value. I would just go back to 1929, 1930. What happened then? Tariffs were raised all over the world. What happened? Trade collapsed. And that's what's going to happen here. If he does go through with these tariffs, and when I first heard it right off the bat, I'm like, that's not really a great idea, because that is going to harm trade. And trade is what creates, if you want to call it velocity worldwide, it creates, money moves, it creates liquidity. You put some sand in those gears, and you're going to have a hard time getting the machine going again. Everything in the world, and I'm not talking about physical assets, I'm talking about financial assets. Everything in the world has the possibility of bankrupting. Gold and silver cannot bankrupt, thus making them the perfect foundation to be the last two financial men standing, when this thing comes down. And like I said, creating tariffs, you got to be really careful, because then you could create a tariff war / trade war.
Yeah.
And, trade slows down. China is super leveraged. We're super leveraged. And all you have to do is knock one of the wheels off the track, and the rest are going to follow. And I think that's tariffs, the way they're being explained to the American people, that they're a good thing and you won't have to pay as much in taxes because foreigners are going to be paying the taxes. Well, what tariffs are going to do is, when you slap a tariff on something, you're going to get less supply of it, because some suppliers are not going to send it. So now you've got less supply, which that on its own raises the price. But if you add 10% or 25% or 50%, whatever, to the widget that you're making, that money is going to ultimately be passed along to the consumer. So something that cost $10 yesterday, and then they put the tariffs on it, might be $13, $14. So you're feeding the inflation monster, and you feed, I guess most importantly, you feed inflation expectations. And what that leads to is people basically just trying to spend their currency before it goes further down in value. If you add 10% or 25% or 50%, whatever, to the